Hey there! Today we are diving into a really powerful mental model for making big decisions, especially when the future looks kind of foggy. It's called real options theory, and trust me, it's a game changer for finding value where you'd least expect it, right inside of uncertainty itself.
So let's kick things off with a question, a bit of a puzzle. Why is it that so many brilliant world-changing ideas get shot down in the boardroom? The numbers just don't seem to add up at first glance. Well, it happens all the time, and it's usually because the very tools we use to judge an investment can be, well, surprisingly blind to the future.
And that leads us straight to the heart of the issue, what we can call the NPV problem. It's all about how companies have traditionally decided whether to pull the trigger on a big project.
Now, businesses have this standard toolkit, right? You've probably heard of these terms: net present value, or NPV, internal rate of return. They're all designed to spit out a simple yes or no answer on an investment. Seems straightforward enough.
But, and this is a huge but, these tools are all built on this one massive and often totally wrong assumption that the world is predictable. They treat a business plan like a train on a fixed track. Once it pulls out of the station, the path is set. There's no changing course, no adapting, no turning back.
And that contrast really says it all, doesn't it? The traditional view pretends we live in a world of fixed variables and certain outcomes. But the real world, that's all about evolving markets, tons of uncertainty, and making a series of choices over time, not just one big bet. These old tools are just not built for the world we actually live in.
So, if the old way is broken, what's the alternative? Well, it takes a completely new way of thinking, one that doesn't run from uncertainty, but actually embraces it. It's all about thinking in options.
So what in the world is a real option? Simple. It's having the right, but, and this is the most important part, not the obligation, to change your plan as you get new information. It's the power to adapt. It means you can wait, you can expand, you can even pull the plug, all based on how things actually play out. The easiest way to wrap your head around this is to compare it to something you might already know from the financial world. A financial option gives you the right to buy or sell a stock at a set price, right? It helps you manage financial risk. A real option does the exact same thing, but for a real-world project. It gives you the flexibility to change things. It's how you manage strategic uncertainty. It's the same logic, just applied to strategy.
And this isn't some brand new concept. It was actually introduced way back in 1977 by a guy named Stewart Myers. His stroke of genius was connecting the dots, bridging that gap between the hard numbers of finance and the dynamic, messy world of business strategy.
Okay, so this all sounds great in theory, but what does it actually look like in the real world? Well, it turns out this way of thinking gives you a bunch of really powerful strategic levers that you can actually pull. There are four main types. First up, you've got the option to delay. Think of a mining company waiting for commodity prices to go up before they start digging. Then there's the option to expand, like a software company that builds a basic product first, and if people love it, they can scale up and add more features. Third, the option to contract or abandon. Super important. If a new retail location isn't working out, you have the option to cut your losses and close it down. And finally, the option to switch. An auto manufacturer might design a factory that can switch between making gas cars and electric cars depending on demand. Each one is a tool for navigating the future.
And this is where it all clicks. When you start to see these options everywhere, you start to understand the true and often totally hidden value in your projects.
Here it is. This is the simple formula that captures the entire big idea. A project's true worth, its expanded NPV, is not just the old-school calculation. It's the traditional NPV plus the value of all that flexibility, what we call the option value. Seriously, this one little equation changes the entire conversation.
Let's make this totally concrete with a perfect example: developing a new pharmaceutical drug. If you just looked at the initial spreadsheet, these projects would almost always look like a horrible investment.
So check out the development path. That initial research, it's incredibly risky. On its own, the NPV is almost certainly negative. But here's the thing. Success in that first stage doesn't just mean you spent your money well. It means you just bought an option, the option to move on to clinical trials. And if those are successful, you've bought yet another option, the right to go into full production, where that massive payoff is waiting.
This completely reframes how you see the investment. You're not just pouring money into a project hoping for the best. No, you're making a series of smaller investments to purchase opportunities for the future. You're literally buying the right to take the next step.
So is this a perfect, flawless system that solves every problem? Not quite. But its real power isn't about getting the math perfect. It's about the strategic mindset it gives you.
Now, let's be real. This theory has its critics. The math to actually calculate option value can get incredibly complex, and trying to put a precise dollar figure on something like flexibility can feel pretty subjective. There's also the very real danger of analysis paralysis, where you're always waiting for more information and never actually make a move.
But here's the most crucial takeaway of all. You don't need to be a math whiz to use this idea. The real gold isn't in some precise calculation. It's in fundamentally shifting your perspective to one that's way more dynamic, more realistic, and better suited for the messy, uncertain world we all operate in.
At the end of the day, it all boils down to this. We have to look past the immediate numbers on a spreadsheet. The true value of an investment includes all the strategic opportunities it unlocks for the future. What doors does this decision open? What new choices will we have tomorrow that we don't have today? That's where the magic really is.
So, I'll leave you with a challenge. The next time you're facing a big, complex decision, maybe in your career, in your business, whatever, don't just ask about the immediate payoff. Step back and ask yourself, where's the option value here? Where is the hidden value of flexibility? Thinking that way might just change everything.